record to the cloud and screen share. We'll go back to this one. Okay, so we should be recording. So thank you very much, everybody, for joining us today. If there's anybody that is not Canadian here, I will say this up front that this is going to be Canadian content. I'm very, very sorry. It's tax time. It's the time of the year. And Jonathan and I are both Canadian, and this is something that people are struggling with. So please come back next month when it will be general for everybody, or stay if you're interested to see what we're going through. So welcome to the Enhancing the Accountant Bookkeeper Connection series featuring KATA Accounting. And I see Jonathan's got some little curls in his hair too, growing it
Got
out.
a full-on wing going here. It just won't behave.
It's, one thing is, I think with, forcing everything to shut down, a lot of hairstyles or different hairstyles are coming back because you kind of get it to a certain point and you're like, well, hey, maybe I like it like this way. Maybe I don't need to go get my hair cut every 4 weeks or whatever.
Anyway. It's driving me nuts. I got poked in the eye by my own hair for the first time a little while ago.
Oh, no.
But Julia, my wife, wants to braid it. She wants me to grow enough so that she can braid it and see how that goes. We'll see what happens.
Nice. That's interesting. And I know I'm done with the dye now that it's kind of grown out and it's salt. People are paying for this salt and pepper look. They're paying tons of money for it. So I've been convinced to stay. Jen Baldock was one of the ones that convinced me. There was a few people. So
anyway. Looks good.
Hey, well, thank you. And so do you. There we go. So anyway, back to the topic. So for those of you who don't know me, that I think everybody on the call knows me or knows of me if we haven't met in person, I am Tanya Hiltz. I am a certified professional bookkeeper, and I'm the founder of Cloud Business Services, formerly Cloud Bookkeeping Services, and Tanya's Bookkeepers Bootcamp. A little bit about me. I'm not going to go through all of this, but most recently, Insightful Accountant Top Canadian ProAdvisor for 2020, Insightful Accountants Top 100 ProAdvisor for 2018, 19, and 20, CPB Canada's 2019 Professional Leader of the Year, Practice Ignition's Top 50 Women in Accounting 2018, 2019, and nominated for 2020 so far, and into its global firm of the future, and still reigning because we were the last one for 2018, and we'll just kind of leave the rest of it. Everybody can read. So that's about me. So this webinar has been submitted for CEC credits through IPBC, or I keep forgetting to change it, through CPB Canada, and you think I would know better considering I'm on the board. There will be 2 polls that must be answered in order to qualify for the credits. A recording of the webinar will be emailed within 2 days, and certificates for the CEC credits will be emailed within 2 weeks of receiving approval. They generally only meet once a month, so it depends on our timing, but as soon as we get the approval, I'll get them out within generally I try to get them out within a couple of days of receiving the approval. So KATA Accounting. So we've been collaborating with Jonathan and his team for a number of years. We've got multiple mutual clients. What I love about Jonathan and his team is they work in QBO, which is awesome. So we don't have to worry about, year-end journal entries coming back to AP and AR without client names and all of those things that we know drive us crazy with QBO, because Jonathan and his team understand it, QBO as well. So it makes them great to work with. Wonderful attention to client detail. I trust them with my returns as well, my corporate returns, and of course, outstanding customer service. So that's all I have. So I will stop sharing. So Jonathan, you can take over.
Okay. Well, thanks, Tanya. Excuse me looking around. We were talking about the multiple monitors earlier, and I have a few on the go. So I will be looking over here for my presentation over here to see Tanya's lovely face. So as mentioned, today is a Canadian specific presentation. We're going to be talking about peer review. This is something that it does happen, and it can happen for a variety of reasons, but we'll get into more detail in a moment. Just a little bit about KATA Accounting and who the heck am I? I am the founder of KATA Accounting Solutions Professional Corporation. We started in 2014 and pretty much went to the cloud immediately. I was a member of the inaugural Intuit Accountants Council. I've had a long-standing relationship with Intuit, and literally, as recently as yesterday was conferring with them on items. I was a recipient of the 2018 Inspire Accountant Award, which was extraordinarily flattering for contributions to the future of the industry. We're Elite ProAdvisors and QBO Advanced Certified. We are also starting to become the partnership path on Xero as well. We're a trusted advisor for several bookkeeping firms. There are several cloud-based bookkeeping firms for whom we help. We're a thought leader in technology and accounting, and we love working with technology companies. Our tagline is communicate, collaborate, and innovate. And we find that the communicate has been the most important thing. It's the number one way we get customers is I've emailed my accountant, he hasn't responded, and it's been 5 months, things like that. So we try to really be good on the communication side of things. Unfortunately, you always run into challenges from time to time, but that's just the way it's going to be. Just going to do a quick adjustment here. All right. So, so this is the agenda for today. Why are we talking about peer reviews? What is a peer review? What does it stand for? How is it conducted? What the employer needs to do once they get a peer listing, and then the common areas of problems where there could be an issue that will come up, and then of course solutions. So I'm going to ask Tanya to chime in from time to time. Let's start with our first poll question. How does an organization maintain a proper payroll process? A, utilizing a recognized payroll software program. B, using an online calculator. C, updating employee TD1 forms yearly. D, ensuring proper remittances are withheld and remitted. Or is it E, a combination of A, C, and D?
And just a reminder that both poll questions must be answered in order to qualify for your continuing education credits. Okay, so we've got 4 people left. So we'll do 3 people. So we get 5 more seconds. 2 more people. Come on, guys. 5, 4, 3, 2, 1. We'll end the polling and sharing the results now.
Oh yeah, well done, everybody.
100%.
100.
Awesome.
Well done. Well done. Yeah, we find that I'll get into more stories in a few minutes. I don't want to get too far ahead. So, okay. So why are we discussing peer reviews? Well, every business owner that has payroll needs to be aware of this. A peer review happens on basically on the T4 summary. With proper payroll systems, generally speaking, they can be avoided, though there are some things that can definitely trigger it. And the employer has legal responsibilities. Those source deductions, that money that comes off the paycheck is not your money. It's not the government's money. It is the employee's money. So they take this very seriously, and definitely the easiest way to trigger a peer review is to not pay your source deductions regularly. That's the majority of peer reviews we've gone through have been because of somebody becoming delinquent in their source deductions. We take it very seriously. We very much encourage. We think it's going to be a bit more likely this year because of the TWS and CEWS programs during COVID. Though those areas probably won't be reviewed. There's going to be stress on businesses. There will probably be businesses who are late paying source deductions, things like that. But essentially, this is checking to ensure that the correct amounts of CPP and EI have been paid. So yeah, they just want to see that the source deduction payments tie to what was listed on the T4 summary. Did you have anything else to add about why it's important to talk about peer reviews? No?
No.
Okay. All right.
No, it's just like you said it all. It's not their money. And I think that's the biggest thing that employers don't understand when we're talking to them, that they just think they're paying the government. It's not their money. It's not the government's. It's the employee's money. So,
and just, I'm sure I've mentioned this before in other presentations, but I have literally seen lives destroyed and families ruined because a business owner did not submit source deductions, and CRA came back and they ended up putting a lien on the home because even though it's a corporation, this is serious negligence on part of the directors. So they can go after the directors for not having remitted this. They can go after this personally, and it can become a much more complicated system for which you need a lawyer, and that's definitely something you want to try and avoid for your customers.
exactly. I know what I tell our clients is if they are having issues and there is something that they that they can't pay that they want to hold back on. And, you know, a level of importance, source deductions first, absolutely no, do not be late, do not anything. GST second, and third would be corporate and anything else to
Yeah.
any other suppliers.
Essentially, you know, HST and source deductions are funds held by the corporation in trust for another party. It's not their money. And that's why I think those two are the most important, and source deduction being the most important. So
Absolutely. You know, Kim's just asked a quick question in here that kind of ties into that part of it, I think. Is there a date time frame that we can feel that we're safe to not get one once the date's passed, or can they do them whenever? I know I've got one even just as a month ago from 2018.
yep.
For a client, and it turns out they're wrong. What happened was money, they took the money from payroll that they thought was an overpayment because they had it to the wrong month, transferred it to a GST amount owing. We said, no, it's not. Transferred it back, but then when it got transferred back, it got put into the next year. So CRA was wrong on it. They're the ones that had to fix their side of things. But yeah, that was 2018. So I think, and that Jonathan, and correct me if I'm wrong, that they can go back the 7 years like they can on anything.
The statute bar limits.
Limit?
I believe that it is the normal statute bar based upon when things are submitted and the assessment dates and so on. But like I would have to actually look up to confirm, but I'm like 98% sure that they can be statute barred.
And I think it's probably then with the normal that, you know, most of them, you know, would probably trigger summer to fall of the following year, but in any circumstance, they can still pull them at any time.
So just so quickly, a peer review is a pensionable and insurable earnings review. And it's essentially what was reported on the T4 summary. Does it agree with what they received at the CRA with relation to that T4 summary? We recently went through a peer review that involved 2018 and 2019 for a customer, and it all got triggered because the customer paid it in the wrong manner. So it looked like they hadn't paid any source deductions. And in the end, the customers owed like $73 or something random like this. And now we have to do another kind of step to be able to move that credit to a different account and you know, allow that to be used. Essentially, this customer is kind of unique. They were using part-time employees, and now they've gone to a subcontractor model that is actually more appropriate for them. And we'll get into that in a little detail a little bit later on. All right, so let's talk about the process. They look at the T4s and the summary. They first of all make sure that they agree. And then they look at the deductions that they've received and make sure that agrees with the summary. So if you submit T4s that don't tie to a T4 summary, which
Was that just Jonathan that froze? Okay, it's just Jonathan. Oh, sorry, we lost you.
I froze? Okay.
You totally froze.
All right. I'm not sure where it froze, so let me start that over.
Okay.
So the T4s are compared to the T4 summary, which is then compared to the amounts of money received. So if they don't have that money received, that can trigger a peer review, which is the case that I just discussed with one of our customers. The accuracy of the calculations is done by matching the pensionable and insurable earnings reported with the CPP contributions and EI premiums. Am I frozen again? No, okay, good. And then if there's a discrepancy, they can generate a peer review. So in the case of the person who we were talking about, it was generated because they paid it and it looked like it was for a future year or future period, but it was actually for a past period and things like that. So random things that can happen. Don't pay your source deductions. That will quickly generate a peer review for sure, especially if it's a higher number. So yeah, any questions about the process right now? Okay, all right, let's keep going. So once a peer review goes through, there could be a peer listing received that shows the deficiencies and who's being affected, which employees are being affected. You need to review the discrepancies and either indicate that it's a false discrepancy, which is what happened with our most recent one, or pay the outstanding remittances. If that can't be done, then usually further legal action is taken, and your life and your customer's life becomes a nightmare for a while. So it's very important to keep track of those.
Now, I
Yep.
just, sorry, I was just gonna say, I just wanted to add on to there, and I'm not sure if it kind of comes in with here. One thing that I've actually had happen before, that I now try to really, really do when an employee leaves. We have had somebody who they're running their own, they just grabbed stuff
Mhm.
from, PDOC, it was wrong. What will happen is if it's wrong and that employee leaves and they have underpaid on the EI or the CPP, the company is on the hook for both the employee and the employer portion. If the employee has left their employment, there's no way to get that back from the employee. If their employee is still working there, then they could just add that in as a future deduction to go, like, there's ways that they can work around it. But if not, so it's really, really important that we make sure that this is accurate or over contributing, because we can always, it's so much easier to calculate an over contribution rather than an under contribution.
Yeah, and then you can get that transferred to like the HST account or the corporate tax account or something like that,
Exactly.
or
Yep.
refunded. Yeah.
Yep.
Okay. So some common errors: unreported payments for services with independent workers, automobile standby and operating expenses, and then unreported salaries and wages, personal and living expenses, director's fees. There's lots of different spots. One of the key things to be very cautious about is employee versus subcontractor. If CRA comes back and says, no, this person should be an employee, or this person was an employee and they're not there anymore, then that can create, again, a situation similar to what Tanya described, where the company is on the hook for source deductions. And those will be over and above what they've paid out, because they paid the net pay for that individual. So they might end up having to pay the source deductions, issue the T-slips, and then the employee's income, or the former contractor employee income, all of a sudden goes up and adjusts their tax return on the personal side moving forward. We have not had many situations in this. We've had a little bit with regards to the contractor issue, but we haven't had a lot of serious issues with regards to this. Tanya, have you ever had them come back about this?
I have. And I'm still kind of fighting with them 4 years later almost with CRA on this. And it was somebody who they paid out, my client paid out as, so they're now paying them out as an employee, but we had 1 year where they were paying them out as an independent worker based on T4A. They were receiving the invoices. This other person was HST registered. What it came down to is they were driving a truck, and I thought as high as I could with CRA. And then I had a conversation with Stephen Ben Elstein, I think is his name, that speaks a lot. He's from the Canadian Payroll Association, and he and I had a conversation about this, and he says, absolutely not. I should continue to fight that. So I have. And basically they said that no, because he drives, he uses the employer's truck or like the owner's truck, because he's a driver. Now, this guy paid for his license. He's paid for all of that. It was $20,000 investment into the training to get his license to operate, that type of vehicle and whatnot. But because the vehicle he drives is owned by the company, this is where they're saying that no, that is the tools. The tool is that, not the tool is actually maintaining his license. And so, yeah, there's a big issue with that. So they ended up having to pay out. They lost on the EI, the CPP. They could not get that back from the person. This person is now on payroll, and he actually drove for 2 different companies too. So it was completely legit. I have no idea, but CRA was like a dog with a bone with this one. But I'm a bigger dog with a bigger bone, so I'll keep fighting them on it.
So
And I'm not even charging the client for this. At this point,
that's,
I'm just ticked right off. And I think it's garbage and it's wrong. So I'm not even charging the client for any of this back and forth with CRA. It's every couple of months, we'll go back and forth for about an hour or so, and then they'll end up escalating and whatnot. But yeah.
yeah, it's interesting. Peer reviews and HST reviews or examinations are often what's called referred to as looking for breadcrumbs. So they're looking for a trail of breadcrumbs that can lead them to a larger tax recovery. So let's say, for instance, they decide to do a peer review and they find that there are some personal and living expenses that should be a taxable benefit. Oh, and this relates to the shareholder. Oh, let's go look at the shareholder and their different situations and review shareholder loan. And this can lead to a lot of things. So best to just do it right, do it once, and CRA comes back. It's very easy to deal with most peer reviews, most HST examinations. As long as things are documented properly and done properly, it shouldn't be a problem.
Yeah,
um,
I think the only time is if you have somebody who, is trying to either make a name for themselves, feel like they have something to prove. And that's the exact
mhm,
situation that I have here. I've got somebody new who felt like they've got something to prove, and their immediate supervisor, who is the one who keeps telling me, they keep blocking me. I happen to know people that work at the office. And so I happen to know an awful lot more about them, but they have actually had their hands smacked for some things. So, therefore they're pushing and they're actually blocking it from going up, from being escalated the way I would like to see it escalated. But
mhm.
like I said, I'm a bigger dog with a bigger bone right now. So
Yeah, I mean, like the actual review process is not hard. It's just what happens with the fallout can be um, something that can be damaging to your customer relationship. If there's something that you have not advised on that you were aware of and should have advised on, things like that. Vehicles is probably the most common area.
yeah.
Personal use of a company vehicle is probably the most common.
And I've actually had clients that have 2 or 3 years ago, CRA came back in and they were looking for the standby charges,
Yeah,
because you're right, that is very commonly missed, that when
yeah.
dealing with vehicles.
And I mean, it could be other things like personal use of space or other areas that can create challenges. But again, they're looking for the breadcrumbs, right? And they won't necessarily find the breadcrumbs, but just the overall understanding of the situation and making sure things are done right the first time, just prevent the headache from ever happening. Tanya, you recently told me of a situation where the employer had over contributed, but CRA was not very forthcoming on refunding the over contribution. Did you want to mention that at all or discuss that at all? Or is that kind of too
Sure. So,
fresh? Okay.
yeah, so last year I didn't bother. I just didn't have time to double check the T4s for peer reviews when they went through. And we actually had a number of peer reviews come through last year. Funnily enough, all with the same software. This year I'm checking everything. Same issue with the same software. I don't know exactly what it is. Some of it they definitely could have filled out differently on their I guess, oh my God, they're TD ones. But some of them were getting the TD ones and we're entering. So we see clearly there's no basic personal exemption. But meanwhile, on the CPP, the exemption the exemption just seems to not exist in the software for this year. I don't know if that was the issue last year, but I have started looking back at some of the ones from last year that we did not get a peer review on. And the funny thing is I found some of them did end up overpaying when I pulled them in, because we're now using tax cycle. So if you get the XML file on tax cycle, you can pay $125. Because we used to have this big manual spreadsheet that we worked with. Kathy Battery, who's on the call, was absolutely amazing and helped refine things, but there's still some manual input. And then Galit, Sugar, who I don't think is on the call, she's the one that mentioned, well, why don't you use tax cycle? You just do a drag and drop and it does it for you. So it's, $125 very well spent. And I've started to do that for some of the ones last year. And I'm finding that no, several clients overpaid on the CPP side of things, but CRA did not do a peer review on them. They kept their mouth shut. Maybe they know, maybe they didn't know. I just find it really funny that 100% of the ones that was no peer review on last year were a slight overpayment, 20, 40 bucks, here and there on some of them. Some of them were much higher, simply just depending on, the employee. But I actually manually calculated it this year. And on the 3,500 exemption is $190.45 or 54 cents, $190 and change anyway, is what is paid out additional. If you don't catch this when you're filing the T4s and move things around, so we would move it from the CPP over to the income tax, and then it would show as an overpayment basically. So the employer will have paid out the same amount, and then the employee, and then the employer, that'll just show as they've basically overpaid the source deductions, and that would be a refund or transfer into the next year. But we're finding that anybody under 3,500 or even anybody under the max, it's calculating from 0 up, not 3,500 up. So there's a lot of them. And like I say, when I look back at the ones from last year, I just thought that was really interesting that CRA didn't point out the fact that we didn't catch it and they just kind of let it go.
So how are you approaching this situation? Are you filing amendments?
I am likely going to. I'm likely going to do that. I have to get through this T4 season
Of
and
course, yeah.
whatnot. For right now, I'm the only one who knows about it. So at the end of the day, the clients will be happy. It's not like they're, clamoring to get their, couple $100 back because they don't know it exists yet. So I do have time, but yes, I feel that CRA gets, they misspend enough of our money on taxes. I definitely feel that the employers or my clients, it's my duty to make sure that my clients get back everything that's theirs, that's legally theirs, right?
Yeah.
So I absolutely will be doing that.
Yeah, I think that's a good a good principle to take on the situation, right? Like our job is to protect our customers.
Yep.
And yeah, I really appreciate, since I learned of this, I've been doing a similar check, or we've initiated that similar check. But what we're doing, because we're so late in the T4 season, is we're going to submit the T4s and make the employers aware after we've checked if we have to submit amendments. But of course, this has a huge ripple effect, right? Not only does it affect your customer, the employer, but it could affect all the employees. And it
Yep.
could result in a reassessments to their returns as well. So it's something.
Well, on the employee side, what I've experienced on that is if the employee is overpaid, they just move that and they get that as part of a refund back on
Yeah.
their taxes.
Yeah.
So unless there's an underpayment, there's not going to be, any negative.
Well, the reassessment could be a refund. I was just thinking about like the ones from 2018 that you're reviewing. Those taxes, I hope, have been filed already. So those
Exactly.
people might get a surprise, like, oh, here's an extra, $40 or whatever it might be per person.
Yeah, if you're just moving from CPP over to, income taxes, again, like, at the end of the day, $40 is still $40 to the employee side. So I don't think it would impact their side, but it very well might. I mean, I'm just, because I haven't actually started digging in on that end yet. Yeah.
Oh, the joys of the minutia of everything that bookkeepers and accountants have to deal with, eh?
Oh, exactly.
So just back to the slides for a minute. Some common errors that can result in negative outcomes for your customers. The reclassification of employment status, we've talked about that. What's the difference between being a self-employed subcontractor versus being an employee? Pretty much the key difference is, are you providing everything to them? Are you the only person? Can they refuse to do work? So like, for instance, if I have a team member who, I say, hey, can you work on this? And they say, no, I don't want to work on this. Then they can be a subcontractor, right? In those situations, assuming, we don't have an office, but like there's a lot of other different little things. This of course gets into employment law, and that's something that I cannot claim to be an expert on. So it's something to keep in mind and understand the basics of. The vehicle allowances we've talked about. Parking can be something like if parking is paid for at, like I say, a downtown high-rise office, where I've seen literally as high as $48 a day in Toronto, that could end up being a taxable benefit. Things along those, the shareholder benefits, and then of course security and stock options not being accounted for correctly through the process. So some solutions. number one, have a procedure, have a review of how people are paid, the source deductions, and keep track of those taxable benefits, because those are the breadcrumbs that they're often looking for. Update the TD1s on a regular basis. Some people want to have extra tax taken off. Like I have some customers who the T4 they get from their corporations is not their only source of income. So they want to have extra tax taken off of every paycheck so that at the end of the year, they have a refund rather than owing tax. And that's personal benefit. My personal perspective is the money is better accruing interest in my savings account rather than the government's, but not everybody's on the same line. Observe the EI and CPP maximums. And then, sometimes maybe you want to hire an external payroll professional, HR consultant, or an accounting professional to help monitor and implement these systems and make sure that, any chance of error, any risk is mitigated substantially. All right, on to the last question. Wow, this has been a really short one. Let's go back one slide. Was there anything else that you want to talk about good procedures? Do you have apps that you recommend or things that you really like with regards to payroll?
I'm right. Well, what I'm experiencing this year, trying to figure out how to kind of say this. Everybody knows, of course, I only work in QBO. I still have QBO. However, this year I'm finding there's a pain with QBO in the payroll. So it's there. We also use Net, and you know what? I have found it's been a much smaller percentage of ones that had to be adjustments made on Net. However, the processes were much easier. Net, because it's smaller, and I do have the ear of pretty much almost anybody who's on the Net Facebook group has really the ear of the programmers or the founder directly to be able to make change. So 4 or 5 of us had actually asked for the XML file to be able to check this out. And they at first said, no, we can't do it because of this. We told them why. We said, you know what, we really want to be sure that these are accurate and save manual entering. So within 48 hours, they gave us that ability. We're able to then manually input any changes directly in there and then confirm that. And then once we have confirmed and then confirm the T4 summary, the employees receive the email saying everything is ready for them. Unfortunately, QBO in Workforce, I'm not having that easy of a time right now because I've pulled everything out. I fixed it to file the T4s. I'm filing the T4s, manually through tax cycle. Well, not manually, but through tax cycle now. But what's happened is if the employees go into Workforce, it's still going to match their last pay period, and the adjustments aren't going to be there. So if the employees go in now, as far as I'm aware, they can see the wrong T4. So I have filled out the paperwork to go, we can't have a T4 corrected, but we can have the year-to-date corrected. So for 12 companies, it took me days, basically every single evening, a couple hours every evening, to fill in everything through QBO, send it back, and it's going to be 14 days. So they will not be fixed before the T4's deadline this weekend. So my concern with that is now the employees have the wrong T4s, and it's not like their next one is going to have a T4 amended. So I've reported that up, but we know that the larger the company, unfortunately, things don't change as quickly. So I'm on the fence. Well, I'm not on the fence. We've decided this year that anybody who wants to continue to stay with QBO payroll, that's perfectly fine, but I'm going to charge them $150 per T4 to do all of this extra. If there's any changes, if there's no changes to the T4s, no problem. I won't charge them anything extra because it takes nothing for me to pull it in and just, pop it into tax cycle and take a look. But if I have to go through and do those amendments, it is not easy for me to do them. I have to do it earlier. So I have to start this essentially January 1st to make sure that it's in before the deadline and before people start looking for their T4s. But am I going to have that information available the beginning of January through QBO? Probably not. So just some things to take a look at when you're looking at the different, and they're the only 2 that I use, but so just some things to point out when you are looking at the softwares. If you are going to be double checking and making sure that there's no overpayments or anything to avoid the peer reviews, I would ask how easy is it to be able to make these changes before their employees get access to the T4s. That would just be my biggest concern that I'm coming across. NIT also has where you can do a balance at the end of the year. Other people are saying some things. It's actually really good practice if you've got that. Like I say, NIT, if you do it before the last payroll of the year, it'll balance out very quickly for you. I didn't do that this year. This has been a very, very big learning curve. So if you're checking that, then that's great. But not all softwares have the ability to do that check unless you're doing it manually, which now creates a lot more time, which we need to account in our pricing for those of us who are fixed pricing.
Yeah. And
So
that's very challenging. I mean, something else to keep in mind is when it comes to taxable benefits, payroll systems don't know. They require that manual input, that manual,
exactly.
you know, in what's a knowledge that these are taxable benefits that do have to be accounted for. They have to be put in correctly and so on. So
Well,
like
exactly.
we
Yeah.
actually have been working more and more with ADP because we find like, the payroll charges that they charge are comparable to most of the other apps out there, and it's a bit less time consuming from our perspective, and it takes some of the liability and whatnot off of us. Not everybody would agree with this, but like it's an interesting situation with regards to payroll and reporting requirements. You look like you want to say something.
Well, I was just going to say that, what with the taxable benefits, you're absolutely right. My T4, I had to manually adjust for taxable benefits because I started just in the fall for an RSP deduction. So I'm matching, I'm taking $75 a
Good for
paycheck and the
you.
company is matching. So
Good
I'm
for
taking
you.
advantage of things, but that means that I now had to, increase my box 14 because it's not being taken out by NIT. It's being handled by a third party company that they're taking it out of the company bank account and they're still doing it that. But on my T4s, like it shows the deductions and it shows all that on my payroll, but it still doesn't roll into box 14. So I've got to roll that into box 14 and then out of box 40. So yeah, and that's just, from something simple. So you're right that all of that has to be looked at.
Yeah. I'm very happy that we have, I know on this call, there's somebody who is I believe a certified payroll association qualified person. I don't know what the actual designation is
Was
called,
Bonnie on the call? I was saying, oh, Bonnie is.
but this kind of knowledge is very valuable. It's very valuable and it's important.
Yeah.
And
So if that person,
no, especially in an owner managed business, they don't want to hear that they're getting a taxable benefit from their business. And
yeah.
if they go shop around and they look for somebody who will give them the answer they want instead of the answer they need, they'll probably find it. And
Oh, of
at
course.
that point, it can become kind of, well, if they've left you, it's not your problem kind of thing. So,
Yeah.
okay, let's do the last poll question. How do you minimize your exposure to peer reviews? A, maintain current payroll software programs. B, withhold proper source deductions and make timely remittances to CRA. C, not remitting amounts to the CRA. D, ensuring that all forms of pay are properly classified, including bonuses and director's fees. And E, a combination of A, B, and D.
Yeah. So while we wait for this, Kim just asked, do we recommend updating the TD1ON or the provincial ones on a regular basis also? I don't know your thoughts on this, Jonathan. I would think that the federal would be more important because that's the one where you've got the extra taxes deducted off of there. But I do send them out. If you're updating one, you may as well update both. I've never seen anything different on it other than asking for more taxes to come off. And if there is, if anybody is putting that, they might say, yes, they've got eligible dependents or, whatnot, in which case I then contact them and I make sure that they're aware because some people don't know how to fill it in. And let's face it, HR departments are not trained on this unless you have a great big HR department who went to school for that. Most of the little companies' HR departments have no idea what any of that means, but
Most don't
we
have
know.
an HR department.
Exactly. But so I make sure to contact the employee directly with the permission of the owner, of course, to let them know what's going to happen. That if we take the deduction off their paycheck, to have less taxes off their paycheck, they're not going to get that refund at the end of the year, like a single parent. Because again, they might not understand the repercussions of what they're filling in. And I certainly do not want to receive that phone call of a single mother who is upset that she did not get that big refund to help pay off Christmas when she was expecting it because of how she filled out those forms. So I do send them out. I encourage them. We can't enforce it anymore. That changed a couple of years ago. We can't enforce it with them, but I still encourage it with every single employee or client.
So with our personal tax clients, like if somebody has a rental property or multiple jobs or something like that, we do encourage them to contact their HR department, update their TD1 to have extra tax taken off, so they don't get a surprise. You owe $5,000 come the April 30th.
Exactly.
Because that can be a huge burden for people, especially like you mentioned, a single mom working. Let's say there's a single mother working a couple jobs, and in the end, it turns around that, she was expecting a tax refund, but turns around and she owes $1,000. That could be a huge burden for that person. So sometimes it's really good to have those conversations and provide that insight.
Absolutely. And I've even had arguments with, a client that had a small HR department and the HR person trying to tell me I didn't know what I was talking about. And I'm like, no. I do both taxes and payroll. I see both sides of it. You just read the form and don't understand what you're saying, but okay. Poll is done. We've got everybody. So everybody.
Fantastic.
What a bunch of smarty pants we have on
I
the phone.
know. Okay, maybe we lobbed these questions up. We didn't make them as tricky as sometimes, that little comma in the wrong place or whatever, changing those 0 to a 1 or something that can throw people off. But well done, everybody. Yeah, I think really the lesson here is to make sure you have a good plan in place and you have good processes and good software in place that can help you along the way. So,
yeah.
All right.
Okay. So yeah, I was
Love
going
to
say,
connect with everybody. Any questions?
yeah, or anything else somebody wanted to add?
Yeah, stories.
I know Dominique has put in, I guess, something that she had actually experienced with all truck lease operators in Alberta, Toronto financial services industry. So yeah, Dominique is definitely up to date on a lot of this stuff. For sure. So yeah, she's just got some information in there, and basically the subcontract versus employee, again, it most of the time should boil down to, yes, risk of loss and 2 or more clients. Not always, because again, in this one case with the truck, we could prove that he had that he did trucking for 2 clients, that he's turned down jobs, in which case then they've had to go to somebody else or done it himself. But yeah. So just make sure you take a look through that. And then Kathy Badry has her SOP and her best practice for double checking for any of her payroll before year end. And I guess that's it, because nobody else has commented.
So
we've bored everybody to death, or we've just given them, all the information that they need going forward. And
either that or we just spoke a bunch of accountants and just
could be that. Now, Tim, who is masquerading as Promlada, has actually put the CRA link to, let's see where this goes, to the employee or self-employed. So that's very clear. And of course, if you have any issues with the employers, which I have, that I have not agreed, I have sent that out to them and said, you know what, you need to read this and you need to sign off that you have read this and that you understand, because the last thing I want to do is have a client, trying to come back to me after they've been, reviewed and after they've had to pay all this, trying to look for some money. So yeah.
Okay. Well, I'd love to connect with everybody on social. If anybody were not connected already, by all means, please send me a request. I always like getting involved in things there, though I have been pretty quiet. It's been an eventful year, so I've been pretty quiet over the past probably more or less few months at least.
I think a lot of us have. I know I myself, I'm trying to stay good with everything in the social media. And then all of a sudden I realized last week that, oh, I've been so far behind that I haven't, done my regular post of anything, because I normally do it a week ahead of time.
Yeah.
And I haven't done anything for 3 weeks. I'm like, wow, whoops. So, and yeah. So Dominique says, thank you very much. She's very tired. Tax season, end of COVID, all of that stuff, T4s, everything. So that's why she's quiet, but there. Yeah, Rena says, thank you. It was great. Melissa, I think, said, thank you. It was great. No, I don't know why I thought so. Maybe earlier. Stacy said, thank you. It's great. So, oh yeah, Melissa said, thank you up top. So thank you, everybody.
Thanks, everyone. It's nice to connect. I've really actually been looking forward to this. It's nice.
Perfect. And Elena said, thank you. So that's great. So thank you. And again, if there's any questions, you guys know where to reach all of us. So that's great.
All right.
Perfect. All right.
Thanks.
Thanks, everybody. Thanks, Jonathan. We'll talk to you all later.
Take care. Bye.
Okay, take care. Bye.